In this video, I'm going to explain my thesis for why Carvana could be set to have a short squeeze over the coming weeks based on my fundamental and technical analysis. What you just heard was a video I had put out on Carvana when it was trading at $7 2 months ago. Obviously, we're much higher today, so pretty proud of that and how that kind of played out. So if you're not subscribed, subscribe to the channel. 170% gain since that bullish video I put out on Carvana. So shoot, hit that subscribe button. You don't lose anything from it. Just helps us, put our message out. But with that being said, I'll stop patting myself on the back, I promise, and I will get into the video and get into what I have for you all today. So I'm going to be breaking down the search trends for Carvana. I'll also go over the chart, and I will also cover the fundamentals for the stock. So with that being said, I will jump into the video. So as you can see here, obviously you're seeing it all across social media, but on StockTwits, Carvana is the #1 trending stock right now, up almost 60% on the day, 56 to be exact. So really seeing a huge amount of, volume in terms of social media. And when we look more broadly, we can see here that on QuiverQuant, the #1 ranked meme stock is Carvana. And this basically just looks at search trends. So, pretty amazing to see there. And we're definitely seeing that play out today. And then in terms of Wall Street Bets and the mentions on that site, so we're seeing Carvana rank as the 6th most mentioned stock on the platform, Wall Street Bets. So pretty interesting there. Definitely seeing some broad search interest in Carvana. And super interesting here. So the term Carvana stock, it actually topped out in terms of the most search volume actually at the beginning of the year when we had that kind of initial pump. I think it was up to about $20. So we've seen that come down, obviously, but currently we're only at about 8% of that volume. So we're only getting 8% of the amount of searches we got when the stock was, start of 2023, and the stock was, I believe, at around $20. Yeah, so it was about $20 when we were getting all that search volume. So here we are at about $23, 24 to be exact, and we're less than 10% of the search volume compared to $20 back in the start of this year. So what does that tell me? That this tells me that search volume has a lot of room to run, and it would be logical to assume there could be some FOMO, from a lot of market participants over the coming weeks and months. So that could be a bullish catalyst for the stock. With that being said, though, I will jump into some seasonal trends for the stock. So this basically tells me what months are best for Carvana. It's always something I like to look at when I look at stocks. Obviously, we only have 5 years of data here, so I won't really, this isn't the end all be all. But as you can see, June, July, August, they're all pretty bullish months when you look at seasonality. So obviously only 5 years, but on average, the stock jumps 33% in June, 27% in July, and 41% in August. And obviously, the fall is a bearish, season, the fall and the winter. But with that being said, I will jump into the fundamentals of the stock. Obviously, I know not many people are buying purely on fundamentals right now. Obviously, a lot of talk throughout the markets, and obviously pretty good bullish fundamentals. But actually, first, let me just talk through technicals a bit more. So the stock had bottomed back at about $6, which is where shares had bottomed in March. That was when I had made the video about. It's where shares had bottomed in January, and it's where shares had bottomed in November. And I thought this was interesting, and this was why I made the initial video. So shares had basically IPO'd around $8, which was about sneezing distance to this kind of double bottom here. So definitely a good sign there that we bounced off that support. And now we actually bursted through a very crucial level today. So we moved over a $20 resistance level. This is where shares had topped out in the start of 2023. It's also where shares had bottomed back in June and July of 2022. So what does this tell me? This tells me that this $20 level is very crucial, and past levels of resistance become new levels of support. So now that we're above this level, this $20 level, 21 $20 level is a great buying zone in my opinion. Obviously not financial advice, do your own research, but that is how I'm going to be trading the stock. If we come down to 21 again, $20, I will likely put on some calls. And when we look at the moving averages as well, so the 50-day moving average crossed above the 150-day moving average. That was back on May 19th. And that's a sign of bullish momentum. It's not a golden cross, which is when the 50-day crosses above the 200-day moving average, but it's still a bullish sign of momentum. Anytime you see a lower moving average, like a 50-day, cross over a higher moving average, like the 150-day moving average. So definitely a good sign for momentum. And I want to also make this one point too, just before I forget here. So on this breakout of $20, why it's even more significant is the fact that we saw massive volume on the breakout. Anytime you have a breakout of a level, it brings more validity to the breakout when you see a massive spike in volume. So that's really a great sign to see this breakout be combined with the volume spike. That really makes it a firmer level of, new support as the stock obviously rockets higher. So with that being said, that's kind of how I'm going to be trading this bad boy. If we come down to this $20 level, I will likely buy some calls, play for some upside. In terms of the next major resistance level, and I'm not saying this is where Carvana must stop out. I'm just saying this is a clear resistance level. You could see at about $30 is where shares had used this level as support. It's also where shares had used this level as resistance back in June of 2022. So definitely a significant level where buyers and sellers are meeting. So, I think we could probably see a move up to 30. And if we do, I won't be playing for the downside because momentum is so bullish. I honestly wouldn't have the stones for it. But if we moved over 30, let's say, and we consolidated a bit, I would like some calls, over that level. But with that being said, be cognizant of the fact that shares are overbought according to RSI at this point in time. Not the end all be all, but definitely worth at least noting. So with that being said, I will move into the fundamentals of the stock. You heard my trading plan. Let's take a look at some of the financials, the growth metrics for this stock. So this is a really great site, Seeking Alpha. I don't have any promo or anything. I just think it's a good site. But this basically puts the valuation, the growth, the profitability, the momentum, the revisions in relation to the peers. So it compares these stats to the peers and it gives it a grade on how the stock is, kind of stacking up compared to peers. So we can see valuation B minus, growth B, and then momentum obviously A plus. And revisions are A minus, and revisions basically just means how analysts are changing their EPS and revenue estimates. And I'll dive a little bit more granularly into that in a second here. But when we look at the valuation metrics, so EV to sales, first off, obviously the company doesn't make any money, so it's tough to kind of grade them on valuation because there just isn't much available information. But when we look at what we do have for the stock, so we have EV to sales, and we're at about 0.7. The sector median is 1.4 or 1.14, so that's pretty good, better than the sector average, and then the sector median. And then EV to sales is 0.85, which is better than the sector median, And price to sales is also much better than the sector median, which I thought was pretty interesting. So fundamentals, obviously, stock that doesn't make money, but in terms of the data that we do have, it looks pretty good when you compare it to peers. So I will move on to growth here. So revenue growth year over year is down 9%, which is below the peers, and revenue forward growth, and the difference here is forward is basically just the next 12 months. So for the next 12 months, where the company is projecting about down 2%, which is lower than the sector median of up 7%, basically. So not the best sign there. But one thing I loved here was working capital was pretty good. So 32% for working capital, and the sector median is 1.8. So growth honestly doesn't look the best, especially for a company that isn't profitable, to be completely frank. But at the end of the day, it doesn't look horrific either. And I think many people that are trading this stock are likely trading it, not totally based on fundamentals. This was very interesting though. So revisions, like I said, it's basically just the analysts bringing up or down their EPS or revenue targets. And this is just for the last 3 months. So EPS has gone up, analysts have brought up their EPS expectations for Carvana. 17 different analysts have done that. You know how many analysts have brought down their EPS targets? 0. Very interesting. You don't see that much of a consensus very often when you're looking at these. So I thought that was pretty interesting, but it kind of evens itself out here because revenue up revisions were 3 compared to the down revisions of 21. So it seems like the company is moving towards profitability. Obviously, last quarter, Carvana had its first profitable quarter in quite some time. So that's probably playing into the EPS. But revenue is coming down, likely caused by, kind of the pessimism we're seeing throughout the market within, the consumer discretionary space. So obviously consumers having to pay more from inflation, and really just, having them spend less on discretionary goods and just spending in general. So pretty interesting there. 17 up revisions compared to 21 down revisions. So net, it's 1 down revision, but I think the EPS consensus is kind of the major takeaway from this, and definitely is a bullish sign for Carvana, which you can see all these red E's basically mean that they missed estimates. So their last quarter was the first quarter they had beaten estimates for 1, 2, 3, 4, 5, 6, 7 quarters. So they had 7 quarters in a row where they missed expectations, but during the last quarter they met expectations. So that was pretty good to see. Definitely like that trend, obviously. So with that being said, I will end the video there. But if you liked the video, I would appreciate if you left a like and subscribe to the channel. Thanks. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone, happy trading, happy investing.